Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Hechter and Sarah Shaw, both from Anchor Capital. Now today we're talking Zeder, a JSE-listed investment holding company which focuses on agribusinesses as the core of their investment portfolio. Now I think a lot of people, when we think about Zeder investments, a common name which might come to mind has to be Pioneer Foods, as well as the different segments that they have, such as Bacomo cereals, as well as some bread products. But Liam, just to paint further perspective so that viewers actually understand what Zeder comprises of.
Okay, so in terms of Zeder, I think you're right in terms of that it represents a sort of group of agri-assets. Pioneer Foods, which is also listed on the JSE, that investors can get direct access to via their listing on the JSE, makes up about 2/3 of the net asset value of Zeder. But ultimately, there are other assets inside the Zeder portfolio that investors could be excited about getting exposure to. And I think that's ultimately part of the crux of the decision of whether to invest in Zeder versus a company like directly into Pioneer, which ultimately makes up two-thirds of the value.
So Cap Agri and Capspan, what kind of businesses do these involve in then?
Okay, so Capespan, which makes up about 15% of the net asset value of Zeder, is a business that is a marketer and a logistics provider for exporting fruit. So they export fruit all around the world. They've got offices in most continents, and they're a big player that has huge growth potential. So if you're choosing Zeder over Pioneer Foods, getting exposure to Capespan is certainly part of the thesis there.
So if we come to you though, taking a look at the metrics of this particular company, 10 billion rand market cap, so quite sizable in comparison to its valuation on the stock market. How does it fare?
So Zeder is probably trading at around about a 26% discount to its sum of the parts valuation.
That's fairly steep, isn't it?
It is, but I mean, compared to historic highs, I think it got as high as around about 40% when the countrywide drought hit, and there was also some issues regarding its performance fee structure. But so it has come off. Historically, we should look at it, Zeder, to trade about around 15% to what we believe the NAV is. But there's a lot of aspects that alter this.
Mm-hmm. If we do take a look though at its forward PE, 12 times I see?
Yes. So that does look compelling, and I mean, you would mainly look at Pioneer's growth forecasts because that would make up, like Liam said, about 2/3 of the business. But then you've also got its unlisted businesses which are growing quite steadily. I mean, Zard grew earnings at I think about 36% for the last reporting period. So its unlisted entities are also growing well.
For the perspective of a viewer, I know there is a pie chart which will show the 9% holding that it has in Zard Holdings, but the kind of operations that Zard delves into.
Yes, so Zard is a genetic seed company. Zeder has indicated that they put quite a modest valuation on that. If you had to compare it to some of the international seed companies, I mean, the optionality in this business is huge. So at the moment it only makes up about 9% of Zeder, but you've got to take a longer term horizon view. So in the next 10 to 15 years it could be a much larger contributor.
Mm-hmm. If we do come back to the lion's share of its investment holding, Pioneer Foods, as illustrated in that particular pie chart, and when it comes to the bread market, Sasco, I understand, holds quite a significant chunk of the market share within the South African arena.
So in terms of South Africa, it does, although Pioneer would probably indicate that they were not going to get to the same sort of operating margins in terms of bread as possibly a Tiger Brands would. This is probably because of the fact that Sasco is not priced as a premium brand in terms of bread, but what it does do is it opens up larger scale for them to diversify into other areas geographically in Africa. So ultimately the Sasco brand is incredibly valuable to us, although the margins might not get to the same level as a company like Premier, which is owned by Brait, or Tiger Brands, which also sells a lot of bread.
To come back to the strong agricultural focus, though, a lot of investors might be slightly concerned by the El Nino impact and the drought conditions that we recently saw in sub-Saharan Africa.
I think a point worth making in terms of that is that when you look at an agri-business, these are incredibly cyclical. They're highly cyclical businesses, and at the moment the cycle's not in its favor. It's gone through a pretty tough time over the last year or so. Sort of delving specifically into Zeder, what you would want if you want agri exposure, which ultimately offers sort of a structural theme that we want access to, is a diversified portfolio of assets. So in terms of Zeder, you're getting a very broad mix of assets in the agri space, which sort of suits us instead of investing directly in a business which possibly just sells call it chicken, for an example. Yeah.
Maybe that's a good time to bring up the share price comparison regarding Pioneer Foods as well as Zeder's 2-year performance there.
I think a point worth noting there is that there are technical reasons why Zeder does trade at a discount to its net asset value. You know, they do operate with a management fee and a performance fee structure, which is, I mean, it's not uncommon in the sort of listed space, but ultimately investors are generally going to place quite a big discount. Analysts would generally value these performance fee and management fees on a sort of, they would have their own methods of doing it. That's why management haven't stuck a liability into the net asset value calculation. Different asset managers and analysts like us would go back and say, we believe that there's a liability of X in terms of the management fee and performance fee structure that we'd stick into our sort of sum of the parts, which ultimately would mean that while that performance fee and management fee structure is in place, Zeder will trade at a discount to its sum of the parts. At the moment, these fee negotiations are being sort of reconsidered by the PSG management team, and we believe that there will probably be a positive outcome, because ultimately what it does is that it takes cash flow out of the hands of the Zeder management team, and that cash flow could be used for things like buying their own shares back or possibly servicing interest to increase the gearing. So I think progress has been made in terms of that. So PSG have announced with Zeder that they are in negotiations as to possibly changing the structure of the management and performance fee. And in the last year, what they've also done is PSG has said, you know what, you can pay us the performance fee and management fee in the form of Zeder shares, which also frees up free cash. So the business as itself is made up of a group of companies that each need their own cash, but for Zeder to go out and make sort of value accretive acquisitions, access to capital, you know, their multiple is very low because of the discount it's trading at. So, you know, internally, the way we look at it, we would say, if Zeder had, if the performance fee fell away, you'd probably take about 5 to 6% of the discount away in terms of our value. And if the management fee sort of fell away, and there was a more sort of common head office cost structure within Zeder, then you'd probably take another 10% of the discount between the sum of its parts and its net asset value and its market cap away. So what that would do is it would increase the rating of Zeder to what we believe probably could be about a 15 to 16 times earnings. And that then brings Zeder scrip into play. So they'll then be able to issue equity at a higher multiple to make value accretive acquisitions. Now what that does do for the holding company, PSG, which I don't know if we mentioned, so PSG owns sort of a controlling share, is the largest shareholder in Zeder. And what we believe would happen, so PSG would lose out possibly on the cash flow or the additional shares in the form of management fee, but what they would gain is a huge uplift in the value of the Zeder share price, bringing the Zeder's ability to grow even larger into play. So we believe that dynamic is currently being considered by management.
Something else that PSG has been very critically involved in is also looking for expansion opportunities across sub-Saharan Africa with PSG Consult, Curo, Capitec. Is this another opportunity, maybe, as you mentioned, for Zeder to look at acquisitive opportunities in the market, especially the fact that the environment looks slightly weaker, maybe pick up assets for cheap and look to grow across the continent? I
think in terms of Africa, assets started getting ahead of their valuations. I think people saw that, you know, structurally over the next 20 years, the consumer in Africa is a sort of theme that you'd probably want to buy into. But as more people cottoned onto that, the valuations started getting ahead of themselves. So I think possibly at the moment, while valuations are on their way down on the back of lower commodity prices hurting a lot of African economies, I think you'll see companies like Pioneer specifically looking at sort of large ticket acquisitions in Africa and possibly even Europe at the moment, where the valuations are starting to become depressed. So we do see sort of large scale corporate activity inside Zeder, and we believe that the management team are more than capable of making value accretive acquisitions. We rate this management team very highly.
But I take it there are also key lessons to learn here from some of their counterparts in the industry, like Tiger Brands, who went into Nigeria, got their fingers burnt, and looking to divest from that particular opportunity. And some of the management as well from Tiger Brands now also head up Pioneer Foods, if I'm not mistaken.
Well, so Pioneer actually does have a small stake in a Nigerian business. But what they've always said is don't throw the kitchen sink at it. So Tiger Brands now has actually divested or disinvested from its Nigerian operations, and Pioneer has still left a small holding, but I mean, in their life it's probably immaterial. It probably makes up 5% of earnings or less.
And I think just to add on to that, Africa is not a country, and I think coming from South Africa, we know that more than anyone. So I think when you look at Africa, you've got to look at certain markets, what those markets are exposed to, and then go in with a very conservative approach, not overpaying for assets, making sure that the regulatory environment is as business friendly and being sort of confident in your ability to foresee at least a 10-year time horizon, because these aren't trades, these are long-term investment decisions that management teams have to make, and when they're confident in a region, I think they will then go into that region.
Exactly. Well, quite a bit that has been unfolded here with regard to Zeder, but let's take a look now whether to buy, hold or sell the stock. Let's get your view, buy, hold or sell Zeder?
Short term, I think we can expect some volatility in the share price. As Liam said, it is a very cyclical agricultural business, but for long term investors, I do think it is a defensive play, and I would definitely buy Zeder.
Liam, you agree?
Yeah, that's a pretty high conviction call, and I like it. I think in terms of how it fits into a portfolio, it's a nice share to get exposure to. There's a nice themes that you could hold this share for a very long time. I don't think you can take a short-term view on it. At the moment, there is cyclicality that's not in its favor, but I think in terms of the diversification of Zeder's portfolio, they're more exposed to irrigated agriculture outside of the pioneer business, which is at the mercy of cost inflation, going up probably a bit more than pricing inflation on the top line. So I think if you can stomach the volatility in the short term and you can hold this asset for a very long period of time, I would hold it.
Long period being 5 years, I take it.
In agriculture, you don't want to take a short-term view, and as an investor, you don't want to take a short-term view either. So if you believe that this management team can deliver through the cycle, which we believe they can, then yes, you buy the share right now.
Fantastic. Well, it's a buy recommendation and coming through from both my guests tonight for Zeder Holdings. A big thank you once more to both Liam Hechter and Cele, both from Anchor Capital, joining us today, sharing their analysis on Zeder Holdings. Well, that's where we leave it for this week. Join us again next time where we talk more stocks.